we've had that number showing a good performance, only coming in stronger than expected, where the consensus was for a flatlining of the PMI number as a whole. Run us through some of the major drivers here so far.
Good afternoon, Alicia. The key is business activity is picking up strongly. That means there was a ramp up in production activity in manufacturing during March, which is positive. And I think the expectation that we saw in the last few months of better conditions is actually coming through. And we're seeing in this number that from an current business activity point of view, there's certainly been a ramp up. If you look at the future sales orders, that's also strong, and that's in effect accelerating. So if you look at the order books of the manufacturing sector, that's accelerating. So we are positive in terms of the current activity and positive in terms of the immediate future. The expected business conditions slightly lower, but still well above 50. So that means we're in an expansionary phase in terms of current activity, order book and expectations.
And then boding well then for Q1 2011 estimates for South Africa's GDP, one would assume.
For manufacturing and for GDP, yes. This, if you look at this, the quarter, the first 3 months of the year, and you look at the PMI number, it's certainly quite a bit higher than we saw in the last 3 months of the previous year. So it's positive for the underlying real economy.
While we're highlighting the positives, where the concern lies is that this isn't translating into job creation. It seems that the manufacturing sector is still struggling to create jobs. We've seen a drop in performance there with that employment number falling from 51.6 to 46.9, and that quite severe.
It is severe. It's disappointing. That's the one number that really is disappointing. We also saw a pressure on prices, but let's look at the employment number. Unfortunately, you have to say, why is this happening? And you can either take two stances. Number one, you can say there's not enough confidence in the momentum we're seeing in the sector. Now, if you take that point of view, the facts show us that that's actually not the case. There's strong underlying current business activity, still strong business expectations and strong order books, to such an extent that the sector is building up inventory. So there is confidence in the sector. Then you have to say, if there's confidence in the sector, why is the sector not employing people? And you have to start to question the structure perhaps of the sector, the structure of employment. Are the manufacturing side growing in non-employment intensive areas? But unfortunately, there is a problem, and that problem looks to me that is structural of nature, not about confidence. The confidence, other indicators show there is confidence. This must be something to do with the structure.
But it also illustrates, Theo, just how wary then the sector must be of an increasing and rising cost base moving forward, where you've got factors like a rising oil price and electricity tariffs, just some that you've got to consider here.
Certainly. If you look at the price subsector that we monitor, it is extremely high, and it has shown steady growth in terms of pricing pressure. But that's worldwide. We're seeing in all the PMIs today that's released, all of them show the pressure in terms of input costs. And me and you, we can see that. We can see that when we stop at the pump to put in petrol, when we buy diesel, when we buy raw goods that's used in the manufacturing process, you can see the pricing pressure. So that's not a surprise, the fact that there's incredible pricing pressure. What is disappointing, and is a bit of a surprise, is that all the other momentums is in place, bar for the employment sector.
Looking at that pricing pressure, though, we've got that index sitting at 88 points on that front. It also is telling of what that scenario is looking like for inflation moving forward in the country.
Yes, specifically on the PPI, this pricing pressure we're seeing here, there could two things that it could result in. Number one, higher prices for manufactured goods, which will happen. We will see higher prices. We will see the pressure coming through. Secondly, if that pricing pressure is not being passed on to the consumer, we will see margins in the manufacturing sector contracting or being put under pressure.